I'm going to tell you about a strategy that has been used for over 100 years by banks, companies, and some of the most successful families and individuals past and present. As you watch this video, there are over 3,200 banks in the United States that have billions of dollars worth of their money in this asset. And no, this asset isn't real estate or bonds. This asset is specialized, max-funded life insurance. Now, before clicking away, just hear me out, because I think you'll be surprised when you hear all the benefits that this type of life insurance offers. I call this strategy the AND asset, which allows you to store and save your money while giving you the ability to also maintain liquidity and control. In other words, this strategy is one of the most efficient ways to save and use your money at the same time. In the next couple minutes, I'm going to break down what the strategy is, how it works, the pros and cons, and even give examples of numbers of how this can be applied in your own life. You'll see why people compare this to a better than investment. You'll understand why this strategy can get a bad rap and how I actually agree with what the critics say. Before we start though, I want to make sure that one point is clear because it's key to understanding why this strategy and asset is so misunderstood. Life insurance is not an investment. It shouldn't even compete with investments. Rather, it's really in its own financial category. If it's set up and used the right way, it should be seen as a safe place to put your money while giving you long-term enhancers to your investment portfolios, and most importantly, protection. One of the key benefits of this strategy is its multi-use aspect. That's why we call this asset the AND asset, because AND is better than OR. Think of the AND asset like a smartphone. We don't see our phone as an investment that we're getting a direct rate of return from, but I would argue a lot of wealth and opportunities are enhanced by having a smartphone. It's the indirect benefits and uses that matter. The same thing can be said about our AND asset. Let's dive into what exactly is the AND asset and how it works. Life insurance, at its most basic form, is a unilateral contract between you and the insurance company. Unilateral simply means that the company is on the hook for life as long as you keep the contract in good standing. It's important that the company is mutual, meaning the underlying profits goes back to the policyholders through dividends instead of some outside shareholders. It's also important that the insurance companies have a long track record, good ratings, and allow their contracts to be specially designed for max funding. So what does it mean when I say specially designed, max funded? If someone's going to use life insurance as an AND asset, it's vital its contract is specially designed for max funding. Meaning you want to optimize cash and living benefits rather than just the death insurance benefit. The way to do that is to minimize the drags and cost of the underlying insurance while maximizing the living cash benefits in the policy. It's counterintuitive to think about, but instead of wanting the highest insurance benefit for the least amount of money, we should be asking, how much can I contribute for the least amount of insurance benefit? The beautiful thing is, you usually get the best of both worlds when max funding life insurance. Here's an example of a non-maximized life insurance contract. Your contributions aren't flexible, there's little to no cash value available early on, it takes a long time to break even, meaning you have more money than what you put in. In most life insurance designs, the critics aren't wrong when they say it's a bad place to put your money. So what happens when we max fund that same contract with the same company? It looks radically different. Lots of early cash value available, very flexible in funding on the amount and length of time, much earlier break evens, and much better long-term growth. In summary, how you design the policy is the main difference between it being inefficient and non-flexible versus it being efficient and giving you more options and upsides for the future. Next, I'm going to go through a total of 13 different pros and cons of a max funded policy. When your policy is set up and used properly, the benefits are the following. It's one of the safest places to store your money. Built-in guarantees of lifetime growth, control and liquidity, leverageable, creditor protections, private, you can grow your money tax-free, you can use your money tax-free, and it can get passed on income tax-free to the next generation. Some of the cons of this strategy, even when it's set up and used properly, number one, in most cases, you don't get a tax deduction in funding. And number two, you don't have dollar for dollar access to your money, meaning it takes a couple of years to have access to all the money that you contributed early on. And number three, not everyone qualifies since it's life insurance. And number four, this is not a get-rich-quick strategy for your money. I hope after hearing the pros and cons, you're starting to understand why many banks and successful people utilize this strategy. The crazy thing is, I haven't even shared with you what this asset's most powerful benefit is, and that is that it's a multidimensional asset, giving your dollars more than one job. Number one, lifetime growth. An AND asset will grow the rest of your life without worrying about taxes, volatility, or management fees. This will be comparable assets like a savings account or money market. A properly designed whole life policy will have a cash-on-cash long-term actual growth rates of anywhere between 2.5% and 4.5%. The taxable equivalent on that could be anywhere from 3% on the low end to 9% on the high end. Not bad for not being an investment. And remember, the goal is lifetime compounding, not just compounding till retirement like so many other strategies. Number 2, control while compounds. In a properly designed policy, you will be able to access your money through a collateralized loan, giving you the ability to access capital with still getting the long-term benefits of insurance. Many people call this function being your own bank or infinite banking. We call this controlled compounding because you can control capital while your money continues to grow. Number 3, future cash flow strategies and options unlocked with permanent life insurance. Life insurance enhances your future options when it comes to cash flow. Whether you have money in the market, a pension, in your house, or some speculative investment, life insurance will give you options on the best way to maximize your portfolio as it relates to cash flow and future legacy. In fact, Ernst & Young did a study showing that a portfolio is better with life insurance and investments rather than just having investments. Ed Slott, the IRA expert, is also a fan of using life insurance in retirement, along with Dr. Wade Fowle, the professor of retirement income and the program director for the RICP designation, which is one of the highest designations for retirement distribution planning. Number 4, protection and legacy. In addition to having full control over your money while getting all the living benefits of insurance, you're also going to get insurance benefits that you can use while you're alive and when you pass away, including the income tax-free death benefit that will get paid to your estate when you pass away. Number 5, saving more. Since you have access to your capital without getting penalized or taxed, it allows people to save more than they would in alternative situations. Saving more allows a greater volume of money to compound for the future. Overall, when structured properly, life insurance gives you multi-uses of your dollars, making it an incredible foundational asset to save and store your cash. When you start adding up all the benefits and uses you can get with a max-funded life insurance, you can start seeing why people compare it to an investment strategies, even though it isn't an investment. Real power comes when we no longer have to choose between options, but have the ability to say yes to the and not to the or. Here's one example of how someone could use the and asset as an emergency fund as well as an opportunity fund. Everyone should decide what is going to be their core emergency fund. For some, it's a couple months worth of expenses, and for others, it's over a year of top-line income. Regardless of your number, it's important to have that number set aside before you start investing and using your policy. After you fill up your emergency fund, then every dollar you save after should be seen as your opportunity fund, which means you should look to allocate that money through a policy loan on activities that get you closer to your goals. If those activities get a greater yield than the borrowing rate, you truly have your dollars doing more than one thing. It's getting the benefits in the policy, and it's also allowing you to fund your activity. The reverse can also be true. If you take a policy loan and the activity underperforms the cost of the loan, you are actually worse off for that activity. Your policy remains solid regardless. The external activity is the key factor for expansion or devastation as it relates to your wealth. Hence why you should always seek investment guidance and factor in risk to whatever decisions you make. Finally, in the last section of this video, I'm going to show you 3 approaches in starting an AND asset. Option number 1, cash flow design. This is for someone who wants to fund using ongoing monthly or annual contributions. For this example, we're going to use $20,000 going into the policy every year. Note, the required contribution for this person would be much lower. For example, let's just say it's $5,000, meaning a total of $15,000 is totally flexible and optional, although it's important to fully fund early on to maximize the value of the living benefits of the policy. We also give our clients the ability to fund ongoing as an option for ongoing cash flow efficiency, even though in many cases the minimum funding period is only 7 years. This design is popular for those who have consistent cash flow that want to be able to save for the long term, while also having access to their money throughout their life. Option number 2 is a front load design. This is for someone who has upfront money and they want to use to jumpstart their AND asset policy. For example, let's say you have an initial $100,000 to front load in a life insurance policy, and then you pay $20,000 ongoing. Typically, on a front load, we can see 85% or more cash value available upon funding. The $20,000 ongoing contribution would have flexibility as well, and depending on the front load amount, may vary from the ongoing required contribution. This design is very popular for those that are sitting on cash and see the benefits of max funded life insurance. Option number 3, convertible term. This is for someone that sees the value of permanent life insurance, but doesn't have the initial premium contributions to have the strategy make sense for their financial goals. We can secure convertible term insurance that gives you life insurance protection first and foremost, and also gives you the ability to convert to an and asset in the future without any future health qualifications, giving you a cheaper way to protect your family now and giving you options to convert in the future. This design is very popular for those who want an and asset but just aren't ready to fund it properly yet. The real question to ask yourself is, will an and asset help you with your financial goals? Because it doesn't matter how amazing the strategy is if it doesn't help you get closer to your goals in life. If you come to the end of this video and want to talk with an and asset specialist or want to see if this strategy can help you with your financial situation, click the Get Started button below on this video to talk with someone on our team. Thanks for watching, and we'll see you next time.